The ICP bulls really need to wake up now. We've just dropped another support base. This is dangerous. We're currently retesting that as resistance, and there's a key barrier that we need to overcome to get back into this diagonal and start regaining control for the bulls. I'll tell you something, the bulls have got a job on their hands now. Is it really possible? Is it really possible that we can break out of this range? Is it really possible we can get to this acceleration gap? Is it really possible we can break through the $9? And can we actually reach $13 in the near future on ICP? Unfortunately, we need to deal with what's in front of us. What's in front of us is we've just done a support resistance flip. That's an SR flip. We're currently at resistance, and we're going to look at how big each swing is within this range and how big it is in relative to the previous swing to help us understand and identify what key levels need to hold. If that fails, what's the next support base? All of this I'm going to decipher by looking at the tools on the chart and explaining to you what the tools are, how they help us identify this, and what the probabilities are for ICP to start really swinging hard to the upside. That's what we've been waiting for. But we do need to overcome these barriers. We do need to talk about these barriers. We do need to look at these tools. Before we get to the top of this range and breaking through this range, we've got a few things that need to happen first. And before we actually get into what's happening now, what needs to happen within the next few days, within the next few weeks, we need to understand exactly what the macro is. And when you zoom out, you can see that the macro is we've been in this downtrend and we've been in this wedge pattern for such a long period of time that once you break out of the wedge pattern, there's little resistance all the way to $35. I'm not saying it's going to $35 today. I'm not saying it's going to $35 tomorrow. I don't even know if it's going to go to $35. But the reason why I've calculated $35 is I've used this lower high, conservative lower high, discounted the whole of this from 2021 when ICP just went crazy and then dumped really hard. And I've used the Fibonacci tool from this lower high. That was when it settled in the bear market, come back up, tested this area as resistance. And that is where my Fibonacci went. That is where the conservative 38.2% retracement is from that lower high. So I'm not just making up numbers. That's exactly the method in my madness. That is conservative. But we do need to look at what's happening in the short term, because this is what's happened. You've put in a lower high, you've put in a lower high, and then you put in a lower high. So we keep putting in lower highs. So we understand that once we break out of this, this is going to be the acceleration point. Now we'll zoom in even further, and we understand that this is the current range that we're in. Now, it doesn't look much, this range, but when you zoom in, we can look and we can measure how long this range is. Remember, the bigger the range, the bigger the space, bigger the base, should I say, the higher the space. That means once it breaks out with volatility if you've been in a long accumulation phase for a long period of time. Let's measure it from here all the way to where price is now. That's 188 days in this range. And you've seen, we've tested it previously. Here, once, failed, twice, failed, 3 times, failed, 4. See how we're failing, failing, failing. How far is it from where price action is now to the top of this range? It is 28% to the upside. How far is it from the bottom to the top of the range? 45% to the upside. Are we likely to come back down? That's what we're going to talk about next. Before we do get into that, what is this thing on the left-hand side? This is the biggest area of traded volume. This is the fixed range volume profile. So what we've done is we've measured the whole of this range, and what this does is it gives you the biggest area of traded volume. This is this area here that's sat at $5.40. When we hit $5.40, expect a reaction. How do we know that we're going to get a reaction? Just look at what price has done when we've hit this level before, hit this level before, hit this level before. So you can see time and time again, it either acts as resistance or it'll act as support. So we understand that that area is likely to get a reaction when we come back up. Before we get there, we've got a couple of key areas. Now, what I want to do is understand an equal measured move. Things move in swings, and within a range, you see equal measured moves, either 1-2-1s, ABCs, whatever you want to call them. So let's measure this swing here. So if we measure this swing relative to this swing, we can understand and identify, is it an ABC? Is it an equal measured move? Is it likely to be completed? And is this likely to be a bottom? So we can use that using our trend-based fib extension. You go from the top here all the way to the bottom and then back down to the lower high, and you can understand and identify. Look, 1-to-1 equal measured move to the T. That area is $4.68. So it could be a bottom. It might not be a bottom. If we got a 1272 extension, that takes us all the way down here, $4.30. Sometimes this swing is an extension of the first swing. That can happen. We need to break through in the short term $4.94 and then take out to get back into trend $5.12. That's the aim of the game in the short term, $5.12, back into trend. So we've measured that swing. We've measured that swing relative to that swing. We've got an ABC. We've got an equal measured move that's completed here at $4.68. Now we could do exactly the same thing from this swing down to this swing, which is the more local one, back up to the top, and then we can see where our equal measure move lies out here. It's around about $4.44. So we can stick $4.44. That's another support base. What that does is it creates a zone. That creates a buy zone, and that creates a strong support base at this level here, between $4.30 and $4.45. And clues look left. What is that? That's the bottom of the range. What's happened here? It's been respected. It's been respected time and time again through the bottom of this range. So you've got to expect that that is going to be your support base at the bottom of this range. And there's going to be lots of buy orders up at this point. If we can't manage to break and close through this point, let's stick $5.94. So you can see in the short term, these are the barriers. And you can see that these are the resistance points. These are the resistance points. You can see as we move down, these become resistance points. Those become the resistance points. So we've got a couple of barriers to overcome. That's what we need to do in the short term. If we can break $5.40, let's stick that on there because that's going to be a major thing. And when we're above $5.40, that means we're on top of the biggest area of traded volume in the range. What happens? Think of these areas here as big resistance points. That's the biggest sticking points. You can see these are the biggest sticking points. You can see time and time again how price reacts at these big volume levels. So monitor this, guys. That's what we want in the short term. If we get rejected at this point, expect to come all the way back down to this. We know we've got a strong support base there. Clues look left. That's the bottom of this range. That keeps getting bought up time and time again, time and time again, time and time again, each time that we go through the bottom of this range. So remember that, guys. That's the support base. That's what I'm looking for in the short term. One thing that you can do is just stick a simple trend line on there, wait for a break of trend. Remember, the more touches, the more chance you are of holding the trend until once you break, that's showing that control has completely changed. So what I mean is the bears have got control here throughout the whole of here. What's happening? You're putting in lower highs. What's happening? You're putting in lower highs. You're putting in lower lows. You're coming back and you're testing this range. So ultimately, we could carry on all the way back down here. But once you get a break, that's showing for the first time that the bulls have got control. And that's what we're waiting for. We're waiting for the bulls to have control. Once that break happens, then we can identify that these key levels that are previous resistance would act as support bases. And then we can start putting higher lows in and higher highs in, rather than putting lower lows in, lower lows, lower highs, lower lows, lower highs. So wait for the break of trend, wait for the break of trend. That's what I'll be doing. And I just thought I would update you on ICP. It's got a lot of resistance to get through, but when you get through this barrier, this big block here, you've got the acceleration gap. That's going to take you all the way to $9. Once you break through that, we've got little resistance, all the way up here to the top of the trend at $13. And then again, when you break that, you've got limited resistance all the way at 35. So these swings could be fast, they could be hard, and you can see what goes up must come down. Remember that, guys. Anyone that's holding altcoins for 2-3 years, it's a recipe for disaster. Pretty much all altcoins are going to bleed in an alt season. And go and watch tomorrow's video, guys. I've done a video tomorrow on how much they can actually bleed during a bear market. And then you'll understand and identify whether you think holding your altcoin is going to be a gamble in the bear market and whether you think it's going to pay off. Because I give it a 99.9% probability that your altcoin in a bear market is going to drop at least 75% to 99.5%. Some of them completely fail, some of them go to zero. So just remember that, guys. It is all about the hype during the bull market. It is there to bring in the retail. It's there to promise the retail that they're going to be able to change their lives by holding these things for 2, 3, 4 years. I love ICP, I love Cardano, I love Ethereum, I love Bitcoin, I love all of these things. Would I hold them for a long period of time outside of Bitcoin, potentially Ethereum? No, I wouldn't. Why? Because when they drop during a bear market, say something drops 90% during a bear market, what does that allow you to do? It allows you to get it 90% cheaper. What happens if you're holding during a bear market and it drops 90%. That means you've dropped 90%. You can't do anything with it. Your capital's probably gone. All you can do is average down, average down, and average down. And what happens if that thing fails in a bear market? It is a recipe for disaster, guys. So make sure that you've got an exit strategy. Follow my channel, Crypto Bullseye. Don't forget, join the Discord group. We've got lots going on there. Great guy, old Buddy Bassett. Got lots going on there. How do you get in there? Link in the description below. Start here. And then you got to scroll. This is the painful bit. Scroll all the way to the top. Just get this scroll thing here. Solve capture. This is where people get stuck. Solve capture at the top of the page here. It's just to get rid of bots, guys. We try and keep this a safe space. Solve the capture, show you're not a bot, and then you'll access main servers. Chart requests. Oh, I've got some chart requests here packed up that I need to do for you guys. So that's about it. What about the crypto fear and greed? We're at 42. We were actually yesterday in fear. So the market was fearful. That's a good thing. When we're in euphoria, when we're in extreme greed, that's when you need to be fearful. So, right, okay. I hope you enjoyed the update on ICP. Let me know in the comments what you want me to cover next, and I'll see you guys very shortly.